Hey guys, welcome to the final part of my little statistics or analytics that I've compiled. Essentially, I've checked out surveys, polls to see what does retail, us and you guys, versus industry and really crypto companies in general. What the hell do they think is going to happen this year in 2026 for the general market? And in the last two videos, I've hit several questions like where do I think Bitcoin all-time high is going to be, me personally, and also the generalization of what retail and industry things. We talked about if all altcoins are going to hit all-time highs, which narratives are going to pump up. So if you missed those, feel free to check them out. I'll have them at the end of this video where you can click on either one at the end. In this video, we're going to sum up this little, mini series. We're going to hit a couple things of the major investor psychology and risk tolerance. So in this video, I'm going to give you the statistics of what in general people believe and then also what I believe. But how risky is crypto really now in today's age or really in 2026? Do we think regulation is a net positive or a net negative? How do we think that governments are going to continue to view Bitcoin? What's the odds of anyone actually selling their crypto at the top? And what do we think about on-chain data versus influencers? That will always be a fun one. And that's one to hit today. So if you're interested in what in general people think about the market in 2026, that's where we're hitting today. So let's just kind of dive right in. And if you guys have been here before and or you get anything from this video, please do press the like and subscribe button. It really does help me out. But regardless, let's talk about some statistics. All right, so first big question of the day is how risky do investors really think crypto in general really is? And one of the big ones is 50 to 60% of investors, half of us essentially, believe there's a 50% plus drawdown possible for almost all crypto, including Bitcoin, this year. Right, so even though Bitcoin has strong institutional backing, the macro, though it's kind of volatile, there's a lot of strong macroeconomics coming in, from new Fed chair and to global supply, finding out quantitative easing, but there are new words or whatever that essentially means the same thing. Countries are turning on the money printers. There's more and more institutional backing. There's more and more CBDC pilots and other type of regulations that are coming and going, and still half of us think that there's going to be 50% or more drop in most of crypto by the end of this year. Now, I'm kind of in that 50%, I think. I think for the most part, yeah, by the end of this year, we're going to have the big bear market. Statistically, we might still kind of be in one now, but not the one that's multi-month, like 6 to 18 months. I think that's going to happen by the end of this year. And typically, Bitcoin drops about 72% from the all-time high to the bear market low. I don't think Bitcoin's going to drop that much. There's just too much consistent money coming in from ETFs, too many large holders now from institutions, strategy. Microsoft talked about it. Countries are pulling in reserves. So I don't think Bitcoin's going to drop 72% like it has on average. 30 to 50%? Very likely. And then what about our altcoins? The majority of them? They're probably going to get slashed. However, it's compared to when. Are most altcoins going to get slashed another 50 to 60 plus percent from prices right now? Some of them. But I don't think we've gotten to the local highs for most of them either. But even if you disagree and we think that our local highs were back in 2024, well, in that case, most of them has already dropped over 50 to 60%. So my opinion on this one, Bitcoin's going to probably drop 30 to 50% by the end of this year from a new all-time high. I think it's going to get up to somewhere between 140 and 160K and then drop down to, I don't think it's going to go too far below 80. Mostly just a lot of the big players, strategy, governments, have paid a little over 80 on average for it. And I just can't see them losing. Plus, market makers will manipulate shit, whatever. When it comes to the rest of our crypto, it hardly depends on the narrative, right? And how high do they get in the first place. But I think we're going to have a good turn up, at least a relief rally for the top 200 or 300. And yeah, I think that most crypto is going to get slashed by at least 50% from new highs or local highs for 2026 by the end of it. What are your thoughts? Regulation, positive or negative? I will probably make at least one, probably more, full videos on this down the road. Let's give stats, then I'll give my opinion. So, about 65% of retail investors apparently see regulation as a net positive long term, mainly for the clarity and institutional adoption. So that means then the other 30 to 40% kind of see it as a negative, fearing restrictive policies or tax implications. One little nuances there is clear regulation will attract institutional capital to help legitimize crypto. We're in that process, like right now, very clearly, right? Then overregulation can stifle a lot of the smaller projects, reduce retail participation, and kind of cause crypto to become a little bit more of a monopoly, like most every other asset and company ends up being over time due to, well, capitalism for the most part. And I do think that's also going to come the way. We're always going to have meme coins because as humans we like to gamble and just go high risk. But I do think that there's going to be, the regulation is going to cut out a lot of projects over time, and it's going to kind of narrow the funnel as to what is possible and realistic for crypto to do. And then just the few best are going to come out on those. So, I mean, that's capitalism 101. Again, I'm for capitalism for the most part. It's got its negatives, don't get me wrong. But do I think regulation is net positive or negative for crypto? Again, I'm going to make future videos on this. My short answer is, for the crypto I invest in, I think it's a net positive. I purposely focus most of my time, efforts, and capital into RWAs and tokenizations because the whole concept of crypto was keeping it decentralized. And, well, for governments and banks to get in, which again is the crypto I usually go for, they have to regulate it and decentralize it. So I think all the regulations is good. It's taken us further and further away from what crypto was initially meant to be. All right, sorry Satoshi, dream's not called. But that's also why I invest into the crypto. I don't really like the concept personally of CBDCs. I actually really don't like it at all for what future implications are going to end up or could end up meaning from it. There's just way too much control that can happen, and with that I think it will happen. So I think regulation as it is a net negative for crypto, but if you invest properly, in my opinion, it's going to be a very strong net positive for your finances. I know that was I think that was a little wishy-washy, but my general thoughts, I'll talk more about them. What do you think? Net positive or net negative with all the regulation legislation that's coming in for crypto? How do governments view Bitcoin? So this varies and this changes all the freaking time, right? I mean, China's gone back and forth how many times from, banning Bitcoin to let's do Bitcoin to screw Bitcoin, we're buying all the gold. And as a generalization with governments, about 40% see Bitcoin as a strategic reserve hedge. 35% see it as a neutral asset. The other 25% really appear to consider it a threat, mainly in authoritarian or heavily fiat-focused countries. And then there's also always the concern of quantum computing, breaking the Bitcoin code, yada yada. So a lot of countries are hesitant, for sure. It's why not every single one has jumped in and started buying Bitcoin or hopped into Bitcoin mining. A lot are unsure. You can tell very clearly who the pros, the ones who are very pro-Bitcoin are, right? So I guess I can't really have an opinion outside statistics on that one. I think most governments see it as a positive. There's also a huge chunk that are hesitant. The big curiosity is how many more are going to hop in this year or the next couple of years, because money talks, and as long as governments feel that Bitcoin or crypto in general is safe for them to invest into, whether they understand it or not, they're going to put their money there. So we'll see how that changes over the years. This next one I was surprised was even a question, but I've seen this come up a lot in Reddit, and honestly I was just searching for general questions that people ask, is will investors actually sell near the top? I mean, historical behavior shows most investors miss the top, and statistically, most investors have to miss the top, or at least local tops, right? I mean, you can have a top or an all-time high almost hit several times. So in theory, I guess if you wait long enough for the next upswing, you can get out on a top. But retail, we rely on emotion and FOMO. We look at charts as logically as we can, and then we make decisions based off of emotion anyway. So we usually miss the top. Um, I think we're actually statistically, I didn't look in this one, but I think we're statistically better at getting in at the bottom than we are at selling at the top. So yes, that's my opinion. I did not look for that statistic, but maybe I will in a future video for that one. So, I mean, on my own personal experience, I don't aim for the tops. I don't aim to try to get out the top or try to get in at the bottom. I get in where I think they're good prices for my goals are. So if a if quant, I had bought everywhere between about $50 and $120, right? And I'll continue doing that with other crypto as long as I think it's in a good price range for where I think it's gonna go and for what my goal is to get out of it. Like I'm not trying to get 100x out of every crypto. I personally am good with a 3 to 5x all day for most of them. Long-term plays are a little different. My thoughts. What are yours? Lastly, on-chain data versus influencers. So about 70% of investors report trusting on-chain data more than narratives or influencers. Retail sentiment often sways by social media, while institutions prioritize the metrics like liquidity, active addresses, ETF flows, and the retail follows after institutions do. And yeah, you should trust on-chain opinion, not financial advice. You should trust on-chain data more than what anyone else says. I don't care if they're influencers, small channels like me, large channels, unless they're talking about the macro metrics and you follow those. But most people just give opinions. Even I try my damnedest to make it opinions based off of fact. It's still my damn opinion. So yeah, you should 100%, in my opinion, trust it or not trust our opinions. How's that? I can't imagine too many people are going to argue on that one, but I'm curious if you do. If there's an influencer you trust concretely, you show them down below if you want, but I'm curious if there is anybody. So those are my thoughts and statistics for some of the questions that I've looked into and that I've seen people ask. And I really am curious your thoughts on these takes. And if there's any other major questions that I did not hit in any of these 3 videos, put them down below and I'll eventually make a 4th one. Because I think this is interesting in terms of learning what people think. Because if we know what other people think, we can make better decisions because we make decisions on what the thought is and emotion. So if I know what most people are thinking, what emotion is going to drive them, I can make a better decision whether it's agreeing or disagreeing with them and make my moves. So there is this video for the day. Thank you guys for being here. I'll talk to you all again soon. Peace.